You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Options Bootcamp is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. NASDAQ, tech forward, leading the U.S. options market and continually rewriting tomorrow. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors, Mark Longo, Dan Passarelli, and Jill Malandrino.
All right, everybody. It is time once again for Options Bootcamp, part of our Education Wednesday here on the old Options Insider Radio Network. My name is Mark Longo from the aforementioned network, as well as, of course, from this fine website, theoptionsinsider.com, where you can go to find all of the shows we do, all the articles we put up, all those great earnings move and earnings move results reports that you guys all love, and a whole bunch more. Theoptionsinsider.com is the place to go. And however you listen in live after the fact via a donkey cart in Estonia on the transistor radio, however you're listening to us, make sure you send those questions in. We do love to hear from you guys because you're taking over the episode. Today, going to be a full mail call palooza to answer your deluge of listener questions. First off, let me see who's joining me on the old Options Bootcamp Drill Instructor Proving Ground today. First off, we got my cohort here, my compatriot in Options Bootcamp crime, the black-hatted one himself, Mr. Dan Passarelli, the founder of Market Taker Mentoring and the author of a few options books, 1 or 2 or 3 or 7 out there. Mr. P, welcome back to the Options Bootcamp program, sir.
Good to be back, Mark. We've got a really exciting show. I was reading through some of the questions. Got some good stuff to talk about today.
Yeah, we got some really good stuff in store for us here. And also joining us once again, holding down the NASDAQ hot seat on the program today, our old friend, the options guy himself, Mr. Brian Overby of Options Playbook Radio fame, joining us here today on Options Bootcamp by way of Ally Invest. Mr. Overby, welcome back to Options Bootcamp, sir.
Oh, that's great to be back, Mark. I appreciate the invite to be able to come in and teach some people some couple things that are two about options.
All right, let's get to it then. Without further ado, a little bit of your mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call portion of the show where you guys take the reins. Let's see how many of you we can squeeze in here on the program. First up, Dan, we got a bit of a follow-up from last episode. As you recall, we've been on a bit of a time spread palooza of late. You guys have had endless questions about time spreads and diagonals and all the other flavors therein. Last episode, we answered a question from another frequent listener, Scott Somer. He wanted to know, Dan, as you recall, about whether it's better to look at your time spreads from a net credit or a net debit perspective. We said on the show, as we've said many times with kind of all of our trades, it really net premium outlay shouldn't be your primary focus. We said that again last show. It's really about the efficacy of the strategy and strike selection and setting up proper risk management, all the other things that are really key. He chimed back in with a follow-up, Dan. He said, first his question was, he asked last time, if you choose to diagonalize your calendar spread, do you prefer to move one option to create a, quote, credit spread diagonal or a debit spread diagonal? As I mentioned, we said it didn't really matter. He chimed in to say he was attempting to refer to the strike price placement when describing the diagonals, not the net premium relationship. He gave a specific example. He said in the case of GLD back on June 3rd, which is, I believe, when he sent this in, when the short cycle, so the short end of the time spread, remember, listeners, traditional time spread, even a diagonal, you're buying the longer-term contract, selling the nearer-term contract. So in this case, he's selling the cycle in June 12th. He's buying the contract on June 19th. He said the short strike was 162.5. He was considering buying either the 163 to 164 calls to be considered part of a, quote, credit spread, because obviously he's selling the more in-the-money strike, listeners, and buying the out-of-the-money strike, and not just doing 164.5 and higher at a long cycle. So, Dan, I know we just talked about his last episode. Does this change your answer at all, that he's not really looking at it from an outlay perspective, but how it informs his strike selection, Dan?
Yeah, I mean, the thing with diagonals is they are extremely niche trading tools. And, like, just you should use different words, because when you say credit spread, like, credit means you get money. Like, that's the only thing it means. And if you use it in any other nomenclature, like, you're just confusing it, you know? So, like, here's the thing, because these are such really, really niche scenarios, and I don't use them that often. Like, you know, I only use them when it gives me some sort of advantage. Here's what you do. You go into your trading platform and you model it. Like, all option-friendly trading platforms will allow you to model a trade. Go in there and model the trade and see if you like the risk reward and how well it fits into your forecast. And if it does, great. And if it doesn't, then don't trade it. And so, you know, don't get hung up on any, like, you can't get hung up on any terms with diagonal. It's just like, look at what the risk reward is, look where you win, look at where you lose, see how that fits into what you expect to happen, and make your choice. Like, it's really, really hard to commoditize analysis of diagonals in any other way than just doing that.
Yeah, and he's effectively asking how far in the money or out of the money should he be on the outer leg versus the inner leg. And you're right, Dan, there really is no setup you always should have in every different name, because every different setup is different. Maybe one you want to be a little bit more out of the money on the diagonal leg going a lot farther out, for maybe you have certain viewpoint on that one, and another one you like to be a little bit more in the money. So you're right, it's kind of hard to have a hard and fast, you should always do diagonals thusly, because it really, diagonals don't work that way. Brian, really quickly, maybe not so much on this question, move away from the premium, because that is a confusing topic. But in general, if you have any thoughts on diagonals, when you like them, or maybe when you don't like them, if you want to share with our audience, now is the time, sir.
All right. Well, one thing that I do want to point out that actually didn't get mentioned here is that there's an additional requirement if you set it up as a quote-unquote credit spread diagonal, where you're selling the lower strike on the call side and buying the higher strike. So there's additional margin that has to be done if you set it up that way. So you want to be cognizant of that when you're doing the trade. If I'm looking at doing a diagonal, sometimes I don't mind doing a diagonal necessarily around earnings if I want to get long a call option. This is just a different way to look at it. It's not necessarily the goal, but I don't mind buying the option contract that is in the earnings expiration month and then selling either a weekly or the monthly that is not in the earnings expiration, and just trying to get long an option contract, hoping the front month expires, and then you get long a contract at a cheaper price. So sometimes I'll take that approach to it, in that I'm hoping volatility will slow down going into earnings. I'm hoping the implied volatility will increase on the option contract that I'm buying. And I think that that's an interesting time to do a diagonal. But once again, just as there's no golden book of answers as to when to do it, but that is one time when I'll consider diagonals.
There you go. Time spreads. We cannot escape time spreads. They are inescapable. And I understand it. They're a very confusing topic. We could do many episodes. We have done many episodes recently. Sounds like, given your questions, we'll probably have to do more. Let's move on, get some other topics here on the show. A little bit of love here. We should say a lot of love, really, because it comes from Anne-Marie Bained. Hope I'm pronouncing that correctly. She says, she listened to our last episode. She says, seriously, though, there is no person I have learned more from in the option space than Dan. His book, Trading Options Greeks, How Time, Volatility, and Other Pricing Factors Drive Profits, and she even includes a reference Amazon link for, wow, she's very nice to you, is the most clear and well-written of them all. So, Dan, what do you think about this love? A, and then B, I had no idea, Dan, that your mom was a fan of the podcast.
Yeah, she just logs in with a whole bunch of different computers. That's where all our data comes. No, Anne-Marie is the best. Oh, my God. I've known Anne-Marie for I don't even know how long. A whole long time. That's all I know. Yeah, she's really great. And she also has a really great book out as well. I'd love to return that plug. The Trading Book. Check that out. If I'm not mistaken, I think she has a website, thetradingbook.com. If not, you can find that thing on Amazon and all that, and she's wonderful.
Dan's mom's book. Check her out. The Trading Book out there. Interesting stuff out there. Let's see what else we've got. Let's see here. Here's an interesting theoretical question. We touched on this on another episode recently of a different program, but similar questions coming. Doesn't seem like this is going to come to pass. In fact, as we're recording this show, listeners, today, the Fed said they're kind of staying pat right now with rates around zero, and they expect a rare bit of insight. They expect that to stay that way out through, I believe they said 2022. So a little bit of insights into this. So some folks have been pricing in a small probability that perhaps we would go negative with rates. That a lot of that was back in the teeth of the sell-off back in mid-March when we were limit down pretty much every day and things looked like they were going to hell in a handbasket fairly quickly. But fast forward to today, doesn't seem like this is so much in the cards, but still, frequent listener Options Game wants to know what happens to options prices with negative interest rates. It's an interesting question. As you said before, a lot of models tend to break down when you start throwing negatives in there. Look at OIV recently, which is the VIX of WTI. When that went negative, it broke OIV. It still is broken. It still is halted. They have not resumed calculating OIV. So sometimes the calculations can get a little bit funky. Obviously, rates are a component of Black-Scholes. So a negative rate makes things a little bit interesting. Brian, it's kind of an interesting thought question. Like I said, we're not really probably going to see it anytime soon. At least I hope not. But you have any thoughts you want to share here for a long-time listener Options Game about what you think negative rates would do to the overall options market?
Well, they'd get it figured out. That's the biggest thing is we see situations when you have extremely large short interest that happens, which is effectively a negative rate on an individual stock. And what happens is the puts go up in price and the calls go down in price. So it's not that they have things inside the model that will account for it. But in general, that's all that you really see is that you're going to see inflated put prices relative to the call prices on the same strike line, but it's just going to be across the markets and the indexes in general. And the only thing that you can reference is really when we have a high short interest on an underlying stock and what happens to those options when that happens.
Dan, you wrote the book that your mom says is the most clear and well-written of them all. And obviously Rho is a options Greek, which details an option sensitivity to interest rates. Usually I jokingly refer to it as the redheaded stepchild of Greeks, so it doesn't get a lot of love. In a negative rates environment, it might be a little bit more interesting. What are your thoughts on Rho and in general how negative rates could impact them?
Yeah, I mean, when interest rates go down, here's the thing. I always like to talk about the why, right? So when you buy stock, there's an opportunity cost. I mean, people who are margin will borrow money to buy stock, and there's an interest rate component that's embedded within there. And so if you buy the call, you don't have to buy the stock. You're controlling the same asset, but without outlaying all that capital. And so that's why Rho exists and why interest rates factor into option prices. But the bottom line is, man, I will tell you, I've been doing this a long time, and I do not I just can't wrap my head around negative interest rates. I'll be the first to admit it. I can understand negative future prices way before I understand negative interest rates. like I'm going to lend you some money and I'm going to give you some extra money for that reason. I don't know. I don't get it.
Yeah, hold on to this for me, and here's a little extra for you.
Yeah.
Hold on to this for me put it in your mattress, and I'll pay you. But yeah, negative rates are obtuse. A great write-up over there we talked about on TWIFO recently. I encourage you to go check it out about the real-world impact of when other economies around the world have gone negative. Thankfully, we haven't really seen that here in the U.S. But yeah, this is thankfully options game, and everyone else has related questions. I don't think we're going to see that. So I don't think you have to worry too much about negative rates. All of a sudden, the calls are completely wonky and the puts are crazy. I don't think we're going to see anything like that anytime soon. Next, we have a couple of questions. I love this trend, this theme. Listeners answering their own questions based on what they've learned on this. That's what this whole network is about, and certainly this program, listeners, is about empowering you guys to answer those questions you may have. First off, Chinook, he's written in before. It sounds familiar. He chimed in, wants to know, what am I seeing here? He sent a graph here or a chart of XLE. He said, what's with the half strikes? What is happening on XLE? 0.21, he lists, there's a 32.21 strike at one point in XLE. We had a similar question come in from Pete from Germany. He wanted to know what the hell was going on with USO, with the splits and the shares he was seeing. As we've said many times on this program and on other programs on this network, if you have questions about contract specs, the first place to go is OCC, the Options Clearing Corp. Go there, type in your ticker symbol into their search bar. Chances are, if there's a weird strike like this 32.21 strike you're seeing here in XLE, or funky corporate actions like that 8-to-1 reverse split that we saw in USO, chances are there will be a circular there explaining exactly what happened with that. And it looks like both Chinook and Pete both took that advice. Chinook wrote in and said, never mind. I listened to you guys. I checked the OC site, and there was a special dividend that adjusted the strike prices. You guys may have covered that before. Pete from Germany chimed in, said, again, this is me. I was enlightened with your simple read the manual and directed me very politely to the archives of the OCC. Best regards, and keep up the great work. So yeah, we love you guys doing that. So we love answering your questions, obviously, but if we can empower you guys to answer your own questions, and again, contract spec stuff, your first stop has to be OCC, because they literally write the rule book on that thing. They will determine what's going on with an adjustment, what the strikes will be, so that's where you need to go. So I'm glad to see that many of you have discovered that as a result of this program here. All right, Marie Smith, next up. She wants to know, is this article correct? Did the USO adjustment cause the sell-off in crude oil? And she links to a Forbes article. We've talked about this before, Marie. I think Russell and I talked about this on this very show. I think about this very article. This article put a lot of misinformation out there that I was very disappointed to see Forbes, a reliable outlet like that, running something like this, which is demonstrably incorrect. The WTI, the role, I should say, for USO did not cause that negative. There's still some interesting analysis to be done as to what exactly triggered it. We know the underlying economic reasons why that was, with storage and other issues having driven that negative. But everyone thought USO, as a result of this article, doing their front month roll, drove it through the negative strike, when in reality, USO was already out. They had already moved to the second month. So they had no part of the May contract, I believe it was, driving it. They were already out. So no, this article is not correct. I encourage you to go to the USO website. They'll tell you exactly what the holdings are now. If you go look at that, you'll see they have positions all the way out till June of 2021 and beyond. So they're not playing really in the front month. It's a very different beast. And short answer to your question, no. Marie, longer answer, go check out the episode Russell and I did on this very show. I believe Dan was there too. Or maybe not. Maybe it might have been the ones Dan missed, where we talked about this in a lot more detail. All right, next up, memes. Memes, I like the name. He wants to know, how does NDX volatility compare to that of the other major indices? What about RUT volatility, and is tech more or less volatile than small caps right now? A lot of ways you guys can do this homework for yourself. You can go over to Ally or another brokerage platform, type in each of these, NDX and other ones, look at the implied volatility, and you will see for yourself. If you want a shorthand way to do it, an easy way to do just that, you guys are all familiar with VIX. VIX is, of course, the S&P 500 volatility. So why don't we start there? VIX come into showtimes at about 26, almost 27, about 2690 or so. And then, of course, lesser-known flavor of VIX is the VXN, a.k.a. the VIX of NASDAQ. That's at about almost a 28. It's about a point higher, 2790 out there. And then an even much less known flavor of VIX, because they effectively discontinued it. It's still out there disseminated, but there's no products on it anymore, is RVX. This is the VIX of the Russell 2000. If you go check on that, it's 39.34. So it's roughly 10 points higher than both of those other indices out there right now, which makes sense. Have you seen how these names have been moving of late? Russell 2000 has been blowing the doors off from a vol perspective out there. So definitely, right now at least, Russell 2000 leading the dance. NASDAQ is a pretty volatile beast, but as you see from VIX, and again, VIX has issues. It's really just front month at the money vol with a little bit of other things baked in there, some skew and a little bit of the weeklies raped in. But basically, it's front month at the money vol. And so that's not exactly always the best indicator of what's going on in the name, but it gives you a good snapshot. And that's kind of what those VIXs out there are for. All right, let's see if we can squeeze some more in here. Trying to get as many of you on the program as we can. Let's get some related questions here. Brian might be up your alley here as well, I think, as our duly appointed broker rep here. First off, BLAC wants to know, does so many companies slashing their dividends, as he puts it, divvies, impact the options market? Are you seeing less options volume as a result? A great program. And then related question here from Henry Teller. He wants to know, has this stay-at-home frenzy turned everyone effectively into day traders? Are the brokers blowing the doors off from a volume perspective these days? Well, I can answer the first part for you really quickly. The OCC numbers just came out. Again, our old friends at OCC. For May volume, again, when people were slashing a lot of dividends during April and May volume was 545.2 million contracts. That's up 17.3% from May of last year. And year-to-date, ADV is at 27.7 million contracts. That's up 41% from this time last year. So short answer to your question, is it causing less volume? No. The answer is there's actually a lot more volume out there. Brian, you're our broker man out there. First off, if you have any thoughts on the overall options volume, have at it. But then B, over there in Ally Land, what have you guys seen as a result of everyone kind of transitioning to a stay-at-home day trader, Brian?
Yeah, well, obviously the market, you quoted the volume numbers, and that's going to be true about all the brokerage firms overall. Now, the downside is that the brokers no longer receive commissions for stock trading, so it's not as lucrative as it once was back in the day, but the volume is definitely up. Not only is the volume up overall, just the people following the market, like our education programs, everything that we do, it's almost doubled the attendance rate across the board. So now volumes are up. People wanting to learn more is up. So we're getting a lot of feedback from the clients. Our email inbox is just completely packed. It's hard for us to even keep up with on the service requirements because people are asking questions because they have time on their hand. And that has turned into higher volume on stocks and on option contracts across the board. And I think that's got to be true with almost all the brokers that are out there.
All right, coming towards the end of it here, let's get some a fun one, a softball for you here, Dan. You can also chime in on the volume if you want as well. This comes from Michael Hendricks. He says, I am interested in learning options. I'm a beginner, he says, and I'm not sure where to start. I've done some studying, taken a few courses here and there, but they're very expensive. And I've learned that without someone actually mentoring me, I get lost really fast. I don't have the brain power to figure out some of the stuff on my own. Don't sell yourself short there, Michael. I don't have the finances to figure it out on my own and lose a bunch of money. I'm looking for someone to walk with me as in turn. Says I haven't lost any money in the market yet, but I want to learn. I'm eager to learn. If you want to call me, he gives me his number. Unfortunately, we're not going to call you and walk you through it here on this. That's not what this. We don't have enough time on the show here for boot camp, Michael. Nor is that what we do here at the Options Inside. Luckily, we got someone here on the program who does do that sort of thing. So maybe Mr. P. A little bit of an easy, low softball here for you. If you want to mention what it is you do here for Mr. Hendricks, you may be interested. And then B, if you have any thoughts on overall volume and slashing of dividends and what you're seeing from a result of inquiries over there at MTM, have at it, sir.
Yeah, Michael, the one thing that I will say is that, look, nobody learns how to trade options on their own. Nobody goes and buys a chessboard and, doesn't have somebody explain how the pieces move and becomes like a chess expert. Even reading a book is tough too. Somebody's got to explain it and show you how to do it. That's how I learned. That's how every single professional trader I know learned. They learn from somebody. So you're in luck, Michael. Hopefully you're listening live right now because I just posted on Twitter and I literally said for Michael. And I posted the URL for a class that starts in an hour that you're going to love. And the best part of it is at the end of that class, I actually have a really super special deal to give you a month of our classes at a really, really great price that I do just every once in a while. So it's kind of a special opportunity. So hopefully you're listening live. Go to Twitter. And my post about a minute ago says for Michael, and just click on that GoToWebinar link, and I'll show you how you can get started.
There you go. Ask and you shall receive. Options Bootcamp listeners. We just retweeted it for you out there as well. So there you go. Speaking of listeners, let's end with a little bit of love here on the old program, as we want to do in these dire times. All right, let's go out to iTunes, where a lot of you have been leaving nice reviews. Thank you very much for all of you who have done so. We got a 5-star review here from IRR Guy. He says, great options show with varying opinions on strategies. Easy listens. Well, thank you for that. Another 5-star review here from Elk Trout 77. He says, keep the boot camp alive. Excellent content, guys. Thank you for all of your effort putting this together, but don't quit on us now. Keep the content coming. Yes, you're referring to the many struggles we've had to keep this show. It's very popular. Everyone loves it. Keeping it going behind the scenes has been more of a challenge, but we're committed to bringing it to you these days. So glad to see you, Elk Trout, are enjoying it, and there's other rest out there. Another 5-star review, Alan TPA. Very educational. Great show. Very educational and easy to understand. Keep up the good work. Well, thank you, Alan. Keep up the listening. And another one here from Andre K7. Great program. Thank you. Well, thank you for listening. Thank you to everyone out there who has taken the time to leave those reviews. Those are important to keep the new people discovering this program, which is very important right now. In these crazy times, people need a show like this. So if you haven't done so already, head on over there. Leave whatever your heart desires. If you don't think it's 5 stars, hey, have at it. If you think it's 5 stars, like a lot of you did, like I said, Dan, we've been doing the show for a long time, got a lot of reviews, and the average is still like 4.5 stars, insanely. So people obviously like the show. It's very hard to keep that average towards 5 the longer a show's been around. So glad to see you guys are liking it. Thanks to all of you out there who have left a review out there. And Mr. Brian, holding down our NASDAQ hot seat. He did double duty here. 2 shows, sir. If folks are intrigued, they want to get more OVERBY in their lives, or maybe they want to just kick the tires over there at Ally, where should they go? What should they do, sir?
Well, you can obviously follow along with the Options Playbook Radio. It usually gets posted every Thursday afternoon on the Options Insider site. And then also, you can email me directly at theoptionsguy@invest.ally.com. And please check out our YouTube channel. We're doing a lot more educational events on the actual Ally YouTube channel. So please check that out. And thanks again for inviting me. I appreciate being on with both you and Dan. It was really enjoyable.
Well, it was great having you on. Dan, you already gave your plug, but really quickly, if you want to add anything, I know you've been doing a lot on YouTube there as well. What can folks find on your YouTube, sir?
Yeah, I've been posting some updated videos and getting a fair amount of people coming and visiting me. So visit us. It's just youtube.com/Market Taker Mentoring, all one word.
There you go. Don't forget the second T, Market Taker, 2 T's, Mentoring over there on the YouTube. And on behalf of Mr. P and Mr. Overby and our friends over there in NASDAQ, and indeed myself, I think all of you out there took the time to listen live, to write reviews on your platform of choice. We haven't even looked at Google Podcasts or all the other places the show is live. Share some great ones there, too. Leave those reviews. Keep the folks discovering the show. We appreciate it. And we'll see you back here next time for more Options Bootcamp.
Options Bootcamp is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. NASDAQ. Tech forward. Leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.